Hello, everybody, and welcome back to Cryptic Humility. Happy October, or should I say Uptober? We all knew that was coming. From a huge downturn in the crypto market, in the crypto space, to now a crazy uproar for October. Let's get into it. Let's talk about what's happening in the crypto space. Bitcoin reached over $125,000 just this week alone in October. And also, we're going to talk about the government shutting down and how that may influence the crypto space and how well it's doing right now. Which, can I say, I'm very thankful that I recorded this a little bit later in the week because I was originally going to record this after the government shutdown just happened. But now that we're seeing how the crypto space is doing in result of this government shutdown, I'm glad I waited a couple days to see how this turnout actually is. And not to my surprise, but the crypto space is doing really well in result of it. I know there are a lot of concerns with the government shutdown in general, but typically the S&P 500 actually performs better during government shutdowns, statistically shown, because in the crypto space we're moving towards more AI. We want to have self-custody. We want to be in control of our own assets more. There's actually less of a fear of, government shutdowns or government regulations because we're so heavily focused on becoming our own bank and having our own freedom. But of course, it does impact the crypto space in some ways. And one of the ways that it affects the crypto space is there are a lot of people who are either seeing crypto right now as an opportunity to hedge against financial instability, but also in the same scale, there could be a lot of people that are decreasing their confidence in the crypto space because, they don't want to make riskier investments right now with what's going on with our government. Obviously, as I just previously said, we're seeing in the crypto space that it's quite the opposite. It's moving in our favor. A lot of people are actually interested and more likely to be hedging and purchasing and investing in crypto as a hedge against financial instability with some traditional stocks, bonds, mutual funds, etc., that might be held up due to the government shutting down. The SEC just put out a new standardized list of crypto spot ETFs. So because we talk about education on this podcast, I really want to go into briefly what spot ETFs may look like in the crypto space or just ETFs in general. And so I usually recommend ETFs to people who are a little bit older, maybe not super advanced in the industry, maybe not super prone to understanding what AI is or the blockchain, etc. Maybe they don't want to have direct access to private keys and the DEX. Maybe they just need a simpler solution to investing in crypto, specifically Bitcoin or Ethereum. And there's no financial advice, but when I talk to my friends, what I would suggest to them, and my friends' parents especially, is to go to Fidelity if you already have a financial advisor there or a wealth manager there. Talk to them about investing into their ETF, which allows you to basically have indirect involvement in Bitcoin or Ethereum's price. So it helps you kind of stay away from needing to have your own public key, your own private key, your own wallet. Like if all that digital stuff is just too stressful for you, I would highly encourage you looking into the ETFs. And what I'm going to do is we've done it before on the podcast, but I'm going to list the Fidelity ETFs as a resource down below in this podcast. So if you're interested, maybe your parents are interested and, crypto is performing so well right now with the government shutdown. Maybe it's a good opportunity for you to invest or you've been thinking about it. Definitely check out Fidelity. There are a couple other ones too. I know Grayscale has a couple ETFs, so I'll make sure to list that down below as well so you have all the resources you need to look into it. But with this government shutdown, the SEC has been kind of pending approving some of the ETFs that they've been meaning to get around to approve. One of those is Solana, Cardano. Another one is XRP and Litecoin. What the SEC did is they have a generic listing standard now. So instead of going through each application individually to approve of specific ETFs, now there's just a generic way, like a checklist or a standardized report of what a company or an ETF needs to have in order to get approved by the SEC. Why this is good? Number one, it's not great because the government is shutting down, so it might pend approval. But once this is all over, the SEC is making it 10 times easier for ETFs in the crypto space to get approved. What this means is we're going to see a lot more opportunities for more ETFs to come out, futures, spot ETFs, just a world of opportunities for the ETF space within the crypto community specifically. So while it's not amazing that the government shut down and that might be pending this process temporarily, once it does resume, we're going to be seeing a faster pace of the SEC being able to regulate the crypto space and then more opportunities for people to grow and build these products. I also have this link listed down below. So if you are interested in learning more within the SEC and what this generic listing standards look like, definitely look down below in the podcast description to find what you need. Inflation and job numbers may be delayed, which is going to affect the Federal Reserve's ability to assess interest rates. Why this matters is if interest rates are cut, it's easier for people to get a loan. If they get a loan and the borrowing process is easier, this increases liquidity. With more liquidity, there's more opportunity to invest into crypto, Bitcoin, all these different altcoins, whatever you want to invest in. But because crypto is considered a riskier investment due to all the volatility that's in the space, more liquidity is more opportunity for people to take a bigger risk and then hence investing into the crypto space. So what the Federal Reserve does with interest rates, especially like through this delayed process with the government shutdown, really truly does have an impact on the crypto space and how many more people are likely to invest, and not only invest, but actually have the opportunity to invest. Like I said previously, Bitcoin soared over 125,000 this week, reaching an all-time high, which is so crazy because the last podcast episode that we posted, we were talking about how crypto just had a massive downturn. The SEC and FINRA was looking into all of these accounts because insider trading suspicions with Bitcoin treasury stock. So it's really interesting to see that just last week we had such a downturn and now we're seeing October at its fullest. Love this for the crypto space. The next important piece of news that I want to talk about is let's talk about OnePay. OnePay is a Walmart-backed supported fintech company that is basically trying to be a monopoly for your finances. They do high yield savings, credit cards, debit cards. They're now offering crypto trading, which we're going to be talking about today. They have pay later features and they also have rewards. So if you spend like X amount of money or do something on the platform, you can actually get rewards that in return can be used at Walmart. Not to get this confused though, because OnePay is its own entity outside of Walmart. It's just also an extension of Walmart at the same time, if that makes sense. So like if you're an avid Walmart goer like myself, then OnePay may be a good option for you to receive rewards through Walmart, but also if you're not like super into Walmart and let's say that you're more of a CVS gal, you can also still use OnePay for all your finance options. OnePay was founded in 2021 by Walmart, and the reason why they're initiating crypto trading is because they want to become more competitive against PayPal, Cash App, Venmo, which always on the podcast, I talk about my own opinion about PayPal, Cash App, Venmo, but now OnePay. Before we get into my thoughts about this, I want to say that Zero Hash is a money transmitter, which is actually helping OnePay behind the scenes with all the infrastructure and legitimacies needed to be able to do crypto trading on the platform. Why I'm bringing them up is because last week or a couple weeks ago, we were talking about BitLicense, which are also just known as money transmitter licenses, but BitLicense is specifically for New York. So this is a company that is pretty much certified to be able to do crypto trading, and not only just crypto trading, but the infrastructure that actually is required to be able for a user to come onto OnePay and facilitate the trades, meaning buying, selling, transferring, anything to do with crypto. Now, this is going to be probably an unpopular opinion, but this is my thoughts on Cash App, Venmo, PayPal, and OnePay. While it's great that they're trying to become this hot spot, this centralized place for all your decentralized finance, why I think this is a problem is because it's truly still not giving us freedom against corporate giants. Just like with PayPal, it's awesome that we can do crypto trading, for example, or crypto transfers or whatever. But the company PayPal itself is still monitoring and recording all of our transactions and all of our data for us. What would be amazing is if we had a platform that wasn't run by Walmart or PayPal or Venmo or Cash App or all these huge organizations that are ripping us off with fees, in control of where our money is going. What if we had a platform like a blockchain that could do all of this for us, where there's nobody, no middleman regulating and still having control and access. Like Walmart is such a giant entity. While it's awesome what they're trying to do with OnePay, it really, in my opinion, doesn't help the crypto space continue on in our search for more freedom, more transparency, and just more independence with our own money. We're still relying on OnePay, this government, this governing body, this organization, this company, to be facilitating and managing and running all my finances pretty much, when really I want to be able to do that myself. I hope that makes sense to people. We're going to be talking about something else too that maybe won't be such a popular opinion, but this is what Walmart is doing with OnePay. Super influential in the crypto space. I had to bring awareness to it. What does it mean to be an ERC20 token on Ethereum's blockchain? So an ERC20 token is being able to have certain commands within their protocols and their smart contracts so they can be easily managed throughout Ethereum's blockchain. Basically, ERC20 tokens have to be able to implement certain commands and certain rules within their smart contracts. Since we have so many dApps within the Ethereum ecosystem, the reason why the Ethereum blockchain is setting up this standard with ERC20 tokens is so they can easily be manageable between different dApps, different wallets. We are going to welcome our guest speaker onto the show. We have somebody who is doing phenomenal things in the crypto space, but not only crypto, but agentic AI. I'm going to preface this before they come on. This is a kind of new and kind of far off from my understanding. I've done some research, but the reason why I'm here today is we're going to be trying to have our guest speaker explain these topics so everybody understands them. And again, that's my purpose for the show, is to make sure that these crypto topics are explained simply for anybody that's trying to learn. And cryptic humility, because we're learning at the same time together, even though I've done directed studies and done my research myself, the crypto market is always moving and there's always new things to learn. So I'm going to take you with me today. We're going to be learning something new within AI, within traditional hedge funds, taking them a step above. Let's welcome our guest speaker on now. I am here with my friend James. James and I actually met during Boston Blockchain Week. We were there during Solana Saturday, and James was actually one of the guest speakers there. So we have a lot to cover in this podcast episode. We're going to be talking about his business venture, his background. We're going to be going into a lot of topics today. So if you're a beginner and you're new in this industry, we want to welcome you here. And this is a safe space for you to learn. We're going to teach you the best way how. And James, I'm going to give it up to you. Feel free to talk about your background and let us know how you got into the crypto space.
Sure, yeah. So I was originally invited into the crypto space by a friend he had this chemistry homework open on his computer in undergrad, and he was drinking, and he wasn't doing the chemistry homework. He was just telling me about the meme coins he was purchasing. And so that was my introduction to cryptocurrencies. Definitely on like the degen side, taught me, oh, look, this is how I use my wallet. I bought this fake internet money, and I sold it. I made more money and that kind of thing. But in 2021, I had this problem of like, I had all this Bitcoin that I wanted to sell, but I didn't know when to sell it. And so I built a model that's based on some of the ideas in Benjamin Graham's The Intelligent Investor, that every asset has a fundamental value. And I used research that was done at the University of Miami and the University of Hong Kong to establish a model that told me when to buy and sell Bitcoin. And I was able to use that to sell during the first of the two peaks in the 2021 bull market, which is awesome. Like, selling the top is great with an asset that performs that well.
Right.
And then that success led me to found CoinWorth Capital, LP, which is a family investment trust fund that invests in liquid cryptocurrencies and occasionally into startups, through the Harvard Innovation Labs here in 2022, and started investing a large capital with that in 2023. And then this year, I co-founded Quant.Fun, which is a way to bring forward the hedge fund model by using blockchain technology in really cool ways and enable regular people to access really high returns in DeFi.
Amazing. Don't worry, everybody. James is going to explain this to us in simple terms, and I'm going to help you guys break this down. So let's first start. We're gonna kind of go off topic for a second. First, let me explain and clarify that you went to Harvard, correct?
That's correct.
Okay. So, and when did you? Yeah, no, an amazing achievement. Honestly, I'm very grateful to have you on the show. It's awesome to hear everything that you've already accomplished. So, when did you graduate again?
I graduated with my master's in computer science in 2023.
Okay. All right. Awesome. So that's perfect. So I guess my first question to you, which is totally like kind of off topic, but you just mentioned it, is what are your thoughts on meme coins?
To what level of audience we're talking about? Most beginners should stay away, I think. So what is a meme coin, right? It is a asset that has no fundamental value. People laugh about it having no fundamental value. So that's a good definition to get started with. It's funny
Yes.
that it's actually worthless, but we're going to make it worth something. Ha ha ha, fart coin, whatever. Yeah. So that's a good starting point. If your goal is to have fun and play around with them and like with very small amounts, I think that that can be cute. But for people that are dead serious about making money in meme coins, you have to be a really cutting edge gambler. And not very many people have that like heart of like ice to be able to do that. And so I think that most beginners should stay away from meme coins, although they should enjoy memes. And if they want to play around with tiny amounts, then that's appropriate.
The reason why I think that that's the most important thing to bring up first is because on the podcast, we try to eliminate scams and schemes that happen in the space. One of the biggest issues is people's involvement in the space and where they end up first. And obviously, with like our society and meme coins and TikTok and all these things that are so easily accessible, a lot of people fall into meme coins first. So I really wanted to get your opinion on that. And I love that you said that you kind of have to be a professional, I don't want to say like a professional gambler, but really, the meme coin space, there's a lot of risk in investing in them. And there's also a ton of other avenues that you can go down in crypto to become successful. You don't necessarily always have to go towards X or, and listening to all these social media influencers and buying, getting airdrop tokens and stuff like that. There are other avenues that you can go down. So I love to hear any and everybody's perspective on that comes onto the show because I think a lot of people get lost already in the meme coin space. So that was great. That's good for clarity. The second thing I want to ask you is I know you said CoinWorth Capital, correct, is what you started at school.
Mhm.
So take us through that. What was that experience like? Give us any and all details you can. Maybe if somebody wants to walk in your shoes, what should they do? Explain this to us, how this all worked.
Sure, yeah. So I'll start with a very different story that inspired me, which is in the 1970s, there was an MIT student who built a computerized model to be able to predict the price of frozen orange juice, and it worked. But the thing is, he bought frozen orange juice from the distributor when he should have bought it, but then could only really sell it back to them because it's like kind of a bulky item. And so he sold it back to them at like a discount, but he still made money. And he went on to found Commodities Corporation, which was one of the largest trading firms of the 70s. And so there are so many opportunities in quantitative finance and exploring fundamental valuation model or something more technical to make money on trading assets and figuring out like what it should actually be worth. And so for me, that was with Bitcoin, and I built the model in 2021. And so I would encourage anyone that's interested in like quant finance or even just interested in trading to look at the more algorithmic side of things because frankly, it's just more sophisticated, it makes more money, and it gives you more peace of mind.
What I actually think would be good for you to mention is you have here on LinkedIn TensorFlow. Can you explain that to people because that's a tool that I was like relatively new to that I think could benefit a lot of people.
Yeah. So I'll try to provide more context. So
Good, yeah.
among all quantitative trading, there are different categories. So there's like simple rules based systems or just complex rules based systems, but it's all very discrete and it always does the same exact thing. You put two apples and an orange in there, it'll give you the same flavor of smoothie. With the LLMs, including anything that involves TensorFlow, PyTorch, long short term memory models, any of those like kind of buzzwordy things for machine learning, you put in two apples and an orange, you're gonna get a different flavor of shake. Sometimes it's
Right,
just like
right.
it does have this temperature, this unpredictability to it, and so research has actually shown that these rules based models actually outperform the more complex machine learning models in trading, which is actually kind of funny. And maybe that'll flip eventually one day as AI gets better. But so for now, I would say that like it is a one opportunity to explore ways of trading using machine learning, but it's not necessarily helpful. And you're not going to understand what you're doing because at the end of the day, it is a black box. And so I think it's actually the wrong place for people to start if they're trying to get into algorithmic trading or upgrade their skills.
I don't even know if I told you this, but when I started my whole journey into crypto, I actually got introduced to AI software trading in the FX market. So you're so right that if you're going to be using AI, like especially with investments and stuff, if you don't have that fundamental knowledge to begin with, you're going to be very lost down the road. And I ended up losing a lot of money in that process just because I was making gains, I was making like passive gains, but I didn't understand how the technology was actually working and utilizing the trading that I was doing. So I think why the podcast is so important too is to teach fundamental education and information before you go ahead and use and AI is so big right now. We're going to be talking about a couple different concepts of AI as well, but it's just important to make sure that you do your own research before you just rely on ChatGPT or like any AI functions to be doing things for you. Really truly understand how these functions work. So, you guys had quite a bit of success with that. So, and you're still currently doing that now, correct?
With CoinWorth.
Yes.
So what we actually did is at the beginning of this year, I kind of had a decision to make. Am I going to convert CoinWorth into a traditional American hedge fund, or am I going to do something interesting with DeFi? And I chose to go into the DeFi route because I believe that that's where hedge funds are going to have to head anyway.
Okay.
Specifically because of a particular advancement called an on-chain vault. And what an on-chain vault allows is for you to deposit money into this hopper that I can then make trades with, and then we can split the profits if there are profits. But I can't take your money. It's non-custodial. And so it's actually exempt from the traditional securities regulations in the United States, like the Securities Act of 1933, Securities Exchange Act of 1934. And so with that, that new technology, we can actually have hedge funds that are running on chain and allow for incentive alignment between people that are managing money and people that are depositing money. In the past, if you wanted me to manage some money for you, what you might have had to do is you might have to send money from your wallet to my wallet. I have custody of that now. I can put that in my pocket. I can go buy ice cream, donate it to children in Africa, whatever I want to donate to do that money. It's just custodial with me. And so you really have to trust me a whole lot for that transaction to take place. And that's what traditional hedge funds require. But now we've done this really curious thing with the technology where we've separated the management of the money and the custody. So you always maintain custody of your own money, and I'm able to manage it. And that's separate now, but it was always together before under the traditional hedge fund system. And this is a really big innovation in blockchain technology.
Yes, yes. Good, good, good. Thank you for explaining that. I think that makes it clear. And is that is Quant.Fun, is it not? Isn't that your business venture? I was looking at you
Yeah,
guys have vaults and all right. So
that's half of it.
okay. So is there anything else that you want to share about Coin Worth Capital? Anything else that you think is important to mention to people about the project, about what you worked on? Maybe the overall success. I know you guys had great success with it.
Yeah.
Was that measurable? Where did you guys end up?
I'm not allowed to publicly share returns because it's
Okay. Yep,
American regulations, unfortunately. But
that's
we did
fine.
very well. I'm very thankful for it. I will say that one of the big things that I learned with CoinWorth, because I wasn't just doing algorithmic trading, I was also sometimes having like very large positions in the Chicago Mercantile Exchange, trading Bitcoin futures, Ethereum futures, that when you enter into a position in something as volatile as cryptocurrency, sometimes what happens is when the price goes way above or way below where you entered at, I'm from like Southern Ohio, the country. Like we say, you're dancing with a different girl now, and and so like the relationship you have is actually so different with this asset that I think this actually happens to a lot of people when they buy assets. Particularly, maybe they have 10 or 20 different coins. They're trying to explore things, and some of them go up in value a lot, some of them go down in value a lot. And now you're dancing with all these different girls, and you don't know where you are. This is a whole different party, and so it's actually like, I think that one of the big value propositions for me personally of choosing to deploy capital into these algorithmic vaults instead of more actively managing particular project coins is that I have more peace of mind. And I know that my relationship with what that product is the same.
Right.
Yeah.
No, that makes sense. You said you're from Southern Ohio?
Southern Ohio, like JD Vance.
Hey! Well, you
Hey,
wanna know
hey, hey.
what you wanna know what's so funny is
What?
last week on the podcast, we were just talking about Ohio because we were talking about that Ohio is one of the first states to accept crypto for, like, state fees and state services. Have you heard that?
I didn't hear that. Great for them.
Yeah, no, wait, well, obviously you're in Boston now, but are you ever going back to Ohio, or are you in Bo I never asked you this. Are you in Boston permanently?
I am in Boston permanently. If you put a giant rubber band around Harvard's campus, I'm inside that rubber band.
Okay.
Yeah, but I do go back home for Christmas. But like they're not my family is not particularly interested in technology. They're like real estate. That's their jab. So I don't
I'm
really
sure,
learn about
yeah.
those kind of things. Yeah.
Well, honestly, the things that you're explaining in crypto too are really hard for a lot of people to comprehend. So like
Hmm.
just asking you questions and trying to get that clarity for people is really truly why I'm here. What I think is really cool about Ohio and like back at home for you is that they're very crypto friendly. They're very innovative towards crypto. If I'm driving through Ohio and I have my Easy Pass, am I able to pay like state fees with crypto? I think that what are your thoughts on that? What are your thoughts on crypto becoming more I guess, more friendly within our government and our state? Do you have any thoughts on that? Do you support it?
Of course. Well, we have to bust the monopoly or duopoly that is Visa, MasterCard anyway. They charge so many high fees that actually hurt small businesses the most. And so, not a big fan of Visa myself. And so, anything that helps to replace that system is great. And frankly, the cost of transactions is so low with stablecoins that it makes sense for it to be the default method of payment for a tolling system.
I think definitely stable coins are much, much easier as and actually, so we talk a lot on the podcast that big companies like Visa are looking into Solana for payment processing. I looked into a statistic. Visa right now processes 60,000 transactions per second. And like obviously Solana does parallel payment processing, so they could scale immensely. So I guess like, is Visa gonna still potentially be in the number one position for credit cards and payment processing, or are we expecting other contenders?
Yeah, I mean, it's a really great question. I mean, that goes to some of the current political contention between large firms. So I learned about a lot of this on Sunday. I went to MIT's Nanda, which is a really awesome like agentic AI thing. But they actually did talk about crypto very briefly there, in that the large stablecoin issuers like Circle are now in conflict with large companies like Walmart, Amazon, and others who want to issue their own stablecoin after one Cloudflare specifically, one company said, we're going to issue anyway, regardless of what the law is, because the law says that the retailers cannot issue stablecoins, only the financial companies, which I think is better. It's good for separation of concerns. And so we'll see how that ends up working out. But that's a pretty huge political contest right now to see who actually is able to issue stablecoins and how are we going to ensure that those are good for consumers and not like controlled by centralized entities to the point where we're in trouble.
Right. And let me ask you a question. So I haven't done much research on this, to be completely transparent with you. And also everything is moving in real time. So sometimes it's just hard for me to keep up to date. But yeah, like I'm like trying the best I can to stay up to date in the crypto space. Correct me if I'm wrong, but I know that central banks were interested in creating a coin or like creating some sort of a stable coin. And I don't know if there was like a promotion and support with that, or if they're go against central banks doing that. Have you heard anything with that?
Yeah. So here in the United
Okay.
States, according to Christopher Giancarlo, a good guy, he was the former chairman of the CFTC. We're never going to have a central bank digital currency. You could make an argument that Circle is already kind of in cahoots with the government enough that it's kind of like a central bank digital currency already. I don't know if I buy that or not. But we're never going to have it here. They already do have it in some other countries, and I think it's kind of dystopian, frankly. Like if you can just shut off my money entirely, you can actually see the government can see exactly who I've spent money to immediately. I think that that's actually very concerning for political safety. And so I don't like China's model of having sort of bank digital currency, and I'm not a big fan of India's either.
Yeah, and I think that's something that we don't talk about a lot on the podcast. Like, what would be the negative effects of a bank having like a central currency? And so, do you think that it's just like way too much involvement with our current spending? I mean, does it diminish the decentralization of what makes crypto and blockchain so great? Because aren't we trying to reclaim our power back from banks? Or, so would a bank having some sort of coin would it diminish that? I mean, that's the questions that I ask myself, like, through the space.
Particularly if you use a decentralized ledger just to enforce public knowledge of everything that's ever happened. So that's one danger there. But thankfully, in the United States, we won't have this. It's just super authoritarian, right? You're using this system that allows for a perfect ledger to take place of every transaction that's ever existed. And while we do kind of have that with our current banking system, it's a little bit slow, and the government has to get a subpoena or there are certain limitations on it. But if
Mm.
the governments have this unlimited power to shut off, particularly, I think that's the big thing is like if there's a shut off switch for accounts to be able to transact in that stable coin, then it's not really your crypto. And I think that that's an entire corruption of the purpose of this technology.
Great answer. It's all about being able to protect blockchain and protect the crypto space and everything that we work so hard to achieve in this space. But anyways, let's get back on track. I really want to talk about the business venture, your business
Sure.
venture, Quant.Fun. If you want, you can share your screen and kind of take us through the visual and give us the experience of what it's like to be on the platform.
Yeah. So before I get to the screen, because I don't want to distract people quite yet,
Okay. Yeah. Yeah.
I'll try to explain what it is.
Okay. Perfect.
So Quant.Fun is a retail-friendly, on-chain hedge fund platform that leverages agentic AI to help users invest wisely. That is a dense sentence. Let's break that down.
Yes.
Yes. So retail friendly. We designed it to be really easy for regular people to use. We still have so much more to do there, but one of the ways is that we want Vanessa, regardless of whether you have a base wallet or Solana wallet or Optimism, whatever network you're on, you can just deposit into our vaults and use our platform without having to think about that too much. So that's one of the ways where we try to make it simple. But also, a lot of DeFi projects have so much complexity. It looks like I'm going to go fly a jet when I look at this system of being able to just trade some assets. It's like this is so feature rich, and we believe that we want to keep things simple as much as we can, even though the products are kind of complex. On the user interface, make it easy so that my mom can figure out how to use it. Yeah,
That is so important. That is
yeah.
so well. Also, you want to know, before, not to interrupt you, but
Before-
that is really truly so important because we're so accustomed with AI and crypto. It's the older generation, a lot of the older generation, that we need to help shift, like create a shift into this technology. You know what I'm saying?
Mhm.
So I think the way that you just put that is amazing because, like, yeah, it is your user face friendly enough for somebody that one has no involvement in crypto or blockchain or investing in general. Is it friendly enough for them to use?
Yeah, so maybe for someone that's not doesn't have any idea about investing, I think that that's a really tall order. But for somebody who doesn't have any idea about blockchain, I think we can pull that off. We want to be
Okay.
realistic.
Yeah,
Yeah.
yeah, yeah. One step at a time, one step at a time. But you're on the right track. You're on the right track. Anyways, keep
Choo
going, not to
choo.
interrupt you.
Yeah, yeah. No, you're good. So the next element after we're retail friendly on chain hedge fund platform. So on chain, we are using these decentralized vaults technologies that I mentioned earlier that allow you and I to have incentive alignment and safety while I'm managing the money while it's still in your custody. This is fascinating. The laws that are almost 100 years old have no idea how to handle it. We have good legal counsel, so we feel we're very comfortable using this with United States customers, especially under this current administration. But I think that that's really powerful. It's on chain and anyone around the whole world can access it if they have a Solana wallet. So I think that's super powerful as a selling point for the product.
Absolutely. Yeah, you guys are international. So like if
Mhm.
anybody I mean, crypto is international, so
Naturally,
absolutely.
yeah.
It's almost like it's necessary to offer that feature as well.
Hedge fund platform, what does that mean? We are working with hedge funds to bring their strategies on chain, just like I put my own on chain. We currently have 6 running. And so we can have an entire suite of different options available to people, whether it's in tokenized stocks, tokenized real estate, or maybe just more classic Bitcoin strategies that perform well at different levels of risk reward. And so that's important for us is to be able to allow these hedge funds to reach this global customer scale at an incredibly low cost. And that's one of the reasons why we believe that vaults are actually going to replace the traditional hedge fund structure entirely in due time.
I can see that. I can see
Yeah.
that.
Yeah.
100%. Is there anything else you wanted to say? I don't want to cut you off.
No, no, you're good. You're good. You're good. We can get to the AI stuff now. So, we're retail-friendly on-chain hedge fund platform that leverages agentic AI. All right. So, I did not want to have any AI in my project at all. I said, like, I've heard too much AI slop. Didn't want to do it, but it turns out it's actually necessary for us. And so, what is it necessary for? To help users invest wisely. It doesn't matter how much time you spent in crypto. It's still like a lot to handle if we have a dozen or 2 dozen different hedge fund strategies on the platform, Vanessa. You don't want to have to look through all of that. And
Right.
so one of the things that we're building actually is an agentic AI advisor slash hedge fund manager. This functionality is not built out yet. She's still in her early stages, although she is live. You'll be able to eventually have a conversation with her. She'll figure out what your risk tolerance is, what your goals are, how long you want to leave the money in for, and then she will actually allocate the capital for you in all of the different options without you having to think too much about it. So she'll explain, hey, this is the portfolio I created for you. I expected to return 50% per year. I expected to have these kind of drawdowns. Are you good with this? And then once you tell her, yes, I consent to that, then she will actually manage your money for you across these already safe strategies. And I think that's really cool for a couple of reasons. One is that the agentic AI is well shackled. So she is only able to put your money into these already approved profitable strategies. Super helpful for us, right? When you let AI run off and try to make money in the wild, it typically just loses money. We know that from all kinds of projects. I don't have to give you names. I can be kind to those teams. And so I think this is a really interesting aspect of like, how do we actually make DeFi products easy for people to access by like adding that agentic AI element to it. You can always access it through like the traditional Web3 interface if you want to, but if it's just available by that chat, I think a lot of people really like that and view it as very attractive.
So let me ask you. You said that you sort of kind of didn't want to be involved in AI.
Yeah.
Why is that? Like what are your thoughts on AI as a whole?
I mean, there's just a lot of slop projects out there. And I don't want to be mean or disparage communities. So there are a lot of good projects too, but I had in my interactions with AI founders, I had found out that like for like half of them, I had to spend many, many minutes of conversation to figure out, oh, your product just does this. But they would like say, oh my gosh, it's gonna transform the world. Holy of holies, AI, worship the great overlord. And I'm like, bro, like I like know AI too, but like what are you actually
What are
doing
we
with this
doing here?
business?
Yeah.
Yeah, like I get kind of bored, like hearing this like preaching from some dude I don't know. Like, just tell me what your company does. Like, it's annoying. And so that was part of my reason for not liking it.
Respect that so much. You know
But that's
what?
yeah, please,
It
please.
no, I just want to say it's so there is a lot of that in the space. There is a lot of like, complexities in the space of like over explaining what certain things do here. And it's I don't know. It's part of all the hype in the space too. People are just like trying to feed you nonsense to rope you into a lot of different stuff, which is so surprising. I really respect your honesty in that. And also on the podcast, we try to raise awareness of all this of scams and schemes that happen in the space. And I just think that, with a lot of new projects that come out as well, and people overselling you something or over explaining something, it's almost like it's always too good to be true. So you should be careful with what you get invested and involved in.
Yeah, yeah. I would say be very wary of anyone claiming that their magical AI trading bot is able to make returns because, to my knowledge, like even some of the leading ones, once again, I'll be kind and I won't share the names. They are losing money, right? And they've got big teams working really hard to try to make it make money. But it's just actually really complex to have an AI system understand the entire marketplace and then actually choose the winners in that marketplace. And so that's why we've chosen an entirely different architecture where the AI is actually only allocating capital into already proven human made strategies. And then maybe eventually as technology gets better, we'll change that up. But like I think our current model is like the best way to integrate AI right now where you're actually making money.
So we
Yeah.
took your complex sentence and we made it very simplistic because we love you guys. I actually am having somebody on the podcast soon who is going to be talking about Hey Solana. Have you heard? I mean, I'm sure you've heard about Hey Solana. It's like that kind of it's kind of like Alexa or Siri for investing on the Solana blockchain per se. Have you heard of that?
Your voice powering Solana transactions.
Yeah.
So I've heard of similar things that what they do. They're currently live in production where you actually just type out your answers to a chatbot. This seems to be just a voice model attached to that kind of same thing. So yeah, this is popular enough.
So yeah, it's like it's kind of like a Siri or an Alexa, but you're right. It's not agentic AI. It's more of like the traditional AI because now agentic is it's being able to act on commands for you and not needing human interaction, while like ChatGPT and all these other AI commands are kind of more passive content for you.
Yeah, yeah,
So okay, all right. So I feel like that we'll go back there. We'll
of
come back to
course.
that. So let's keep going on the business venture. Is there anything else you'd like to explain before we pull it up?
I'm ready to explain it. Let me
Let,
share my screen
let's
here.
go. Let's do
Yeah.
it.
Woo, woo, woo. You're
You've
such a
done you've
great host. Wow, what a
no.
great host.
Oh God, thank you. Oh my God. You honestly, a lot of the things you're explaining to me are very complex, but I'm obviously like doing research in the market over time. I understand. Mainly, I just want to make sure that people that are watching completely are following us and get it too. So, but you've done a wonderful job explaining everything, and I appreciate your patience as we try to help people that are listening.
Yeah, yeah. I was speaking with a VC yesterday who doesn't do blockchain, and he said, "You blockchain people, you're always so technical." And I'm like, "Come on!" Without further ado, we are reimagining the hedge fund. Like I mentioned before, there are really cool things happening in blockchain and AI tech that we're bringing together to deliver a way superior user experience versus traditional hedge funds. So these are some of our partners, some of the largest ecosystem partners. Virtuos Protocol is our agentic AI ecosystem that we're involved with, and then Drift provides us with the vaults, and then Jupiter provides us with some of our portfolio view functionality. So
Amazing.
our goal is to make DeFi easy to use for everybody. We have to go through so much complexity, including getting that agentic AI set up just to make it simpler for the user eventually. And so it's kind of funky for me to like talk about what the business is versus what the business does. It's a very different experience because what the business does is it makes Vanessa money without Vanessa having to think about it much. Number go up. That's what the business is. It does. But like what it is, it's like, oh my gosh, look at all these complex technology things. So here's a little brief explainer of vaults and how they're better than traditional hedge funds. So the non-custodial, you're always in control. The transparent, with the traditional hedge fund, you may only get a report once every quarter, maybe sometimes biannually. Whereas with vaults, you can immediately see how much money is in there and how the performance is doing. And then it's accessible to everyone. There was a weird moment last year when I had a friend at JP Morgan send out an invitation to this like CEOs roundtable or like founders roundtable. And I had a phone call with him about it. And he said, yeah, James, I just got to confirm like you had a net worth of $20 million to be able to sit at that table. And I said, yeah, man, not quite there yet.
No, I can make it. I can make it. Yeah.
Yeah. It's like totally, yeah. But so that was the first time I'd ever like run into like an explicit wealth requirement because like I'm doing fine in life. I'm really blessed, but like
Yeah,
I'm not like
absolutely.
that blessed right now.
No,
And so
I'm sure you're doing amazing. I mean, look at
yeah,
everything you've achieved so far,
thank
and
you.
comparison is the thief of joy. So you never
Yeah.
know their experience too, but you are definitely on the right track.
Thank you. I appreciate it.
Yeah.
But so that's part of the motivation or the excitement in offering like access to anyone. Because the thing is, so many people that could invest in these high performance things just don't have access to it because they don't have the private networks to be able to get into some of these small funds that are really exclusive and make a lot of money. And so crypto is able to make tons of money and it's also growing really fast. And so we can actually offer access for everyone, at least in some ways. Maybe I'll get into that more. Here are our strategies. This is Coin Flagship 2 strategy based on my research at Harvard. If you look at these return numbers, these are really big numbers. This is since the beginning of 2020. So it's been a couple of years, about five years. Our strategy returned around 2,200%. That's 22x. Bitcoin returned 15x in that time period. So these are huge numbers. This is actually only through July, and so this has already gone up even more. But the Sharpe ratio is better. So that's like a volatility adjusted number. It kind of shows you if you like just got lucky or if your strategy is actually really good at managing drawdowns. That's what it shows you. And the drawdowns are whenever the price falls. The max drawdown is around half of regular Bitcoin. It's funny. Bitcoin went down 76% from its more local peak from probably looking at the peak at 21 all the way to the DX crash is when you see that.
Oh yeah, that was major too. Oh,
It was
that
big.
scandal. Yeah, we covered that on the podcast because we cover scams and schemes and all that. So that was a big news event that happened in the crypto space.
It was
We've
huge.
yeah, but
Yeah.
no.
I would highly recommend on that. The book Going Infinite by Michael Lewis is fantastic. And he doesn't take a high horse in that book. It's fantastic for that. Like morally, he's really amazing. And he shows you what it would have been like if you were a junior employee in this complex organization when it's not really clear that the fraud is happening, but you don't really know what's going on. It shows you how it could happen to someone like you. I thought that was a really amazing perspective in that book. And I would say that I do not recommend all other crypto books. Like almost all the crypto books are bad. Even maybe for brands new, but it's a technology that changes so fast that you actually just need to learn from YouTube. And so,
I
yeah,
agree. I
yeah,
agree. YouTube will never fail you. YouTube will
YouTube.
never.
Yes. Was this
You
made
know,
this year? Good.
yeah, no, you know what? You're right. You're right. Because there are a lot of books like in Bitcoin from 2011, 2012. And it's like so many things, so much has changed since then. Like, and
Hmm.
also in this time, crypto is finally being regulated. So it's like, there are so many rules and policies and procedures and things changing in the space. So, yeah, just basically go on YouTube, yeah, to learn
Yeah.
or come onto the podcast.
Or the
Come onto the
podcasts.
podcast.
Yeah.
Yes.
I'm sure you seem to do a really good job of helping these complex concepts become simpler. So that's really good so far, guys.
I appreciate that. James, like honestly, we're cryptic humility because we're about having humility on the podcast. I'm so honest. I don't know everything in the crypto space yet. There are
Hmm.
people that are professionals doing things that I don't have a lot of awareness about. So what we try to do is just bring people on that do have that knowledge and as you're, educating me and I'm following along, hopefully we're educating others too. Perfect. Yeah, no, I love this so far. One other thing I wanted to say is the kind of the AI assistant that you have on the platform. I think that is such an amazing feature because
Yeah.
what a lot of people, I guess, run away from is how much do I invest? What do I invest in? Is this going to work out? Like to actually have a second opinion and that second opinion being AI generated in some sort of sense based off of like of data and statistics and just having the computer help you like to say it simply is interesting. A lot of people will probably want to invest more, want to get involved more. It's kind of hard these days to trust just your financial advisor. Sometimes it might be better to trust something that's AI generated, agentic AI that's more I guess I don't want to say like more trustworthy, but just more advanced.
But certainly, and I think that the incentives are better aligned with even with the like agentic AI investor for Quant.Fun versus a financial advisor at like Wells Fargo or something like that, one of these big companies, because we have to actually make really good returns for our customers as a smaller institution to be able to survive, whereas Wells
Right.
Fargo doesn't, and they're kind of incentivized to just help people not lose money versus actually make money. And so I think it's very important for us that people are actually making money and they're not just putting it into very boring things. Because what these financial advisors do, and it's kind of offensive to me, is that they will take 2% of your portfolio every year or 1% if they're a little cheaper for telling you to put things into the S&P 500 and bonds. It's like, man, I could have done that
I know.
myself. Duh.
Exactly. Exactly. And so I guess, yeah, so how does that work for you guys? How does your business model make money? How do you guys make money?
Yeah. So on the passive strategies, which make between like 7 and like 25-30% per year with very low drawdowns or no drawdowns at all, we charge a 1% management fee, which is a little bit cheaper than the industry standard. And then on the active strategies like this Bitcoin flagship 2, we charge a 30% performance fee, which is pretty standard for crypto hedge funds.
Cool. Perfect.
Yeah.
Perfect. Good. Good. I'm glad I asked that question as
Yeah.
well.
And with the actively traded ones, we only split profits with the user if there are profits. And so there's no charge to the user if it's like break even, for example.
Awesome. I like that. That's a nice feature too.
Yeah.
So, do you guys work with a lot of clients already? I know there's certain things you can disclose and not disclose, but like how are you guys doing since the startup process of this?
Yeah. So we've only been around for 2 months. So like
Oh,
it's still
okay.
very early. We're super early. We do have early customers. A lot of them are coming from our pool of 3,000 token holders that are people that wanted to invest in the company in that way and be involved through that. But yeah, we I don't know the exact numbers of how many customers we have because we typically have like a few more every week. But it's the kind of business where it's very scalable. So we could have 1,000 new customers tomorrow and be just fine, or we could have 10 and we're also fine. And so I think that's a really cool aspect of the business. Once you build out this like this software that does scale really well with the blockchain, it just scales, which is fantastic.
Yeah, no, and forgive me. I've had forgot like when you had started this
Oh,
project. Yeah, I didn't know if it had been a year, but actually you might get another prospective customer. I'm intrigued by everything that you got going on here. I know you were gonna go into a couple other things on the website. I didn't want to interrupt you.
yeah, of course. So here's like our little flip of our agent. I made this picture of her. Her name is Quant, and our goal for her is that she'll help users with risk analysis, active management, and then being a fund of funds manager. And so it's actually really important for us that the level of AI involvement is composable for you. And what that means, Vanessa, is if you just want to share a conversation with her and then put in your money yourself, you can do that. If you want to not talk to her at all, you can do that. If you want to just ask her about our company and learn a little bit about Quant.Fun from talking to her, you can do that. Or if you want to go all in and say, hey, she's going to be my agentic hedge fund manager, that she's going to handle everything, then she can also handle that for you. And so I think that that's actually really important because people have different levels of trust in AI systems generally and preferences for their engagement with AI systems. And so by choosing this approach where you don't have to use the agent, but she's available and ready to help you, I think that that's a really real winner.
I agree. I think that is a keen aspect of this because I can't tell you how frustrated I get. This is like a little off topic, but there's a lot of companies now in the United States that are only doing AI customer service.
Hmm.
And obviously this isn't AI customer service. If you're working with somebody that's giving you money and investing their money, you absolutely need a real person to speak to at the end of the day
Hmm.
about your investment. So I like that you have that feature of whatever level of involvement you want in AI, you can have it. So,
Hmm.
you know, you're not it's not like thrown onto and forced upon you to work with this AI bot. So I really love that you're considerate of that. It's important.
And I think also just being a reachable founder. So we have our LinkedIn, our X, we're docs founders, which is actually a rare enough thing in crypto that so many founders actually want to conceal their real identity for some reason. They're like this ultra cypherpunk thing. Good for them, I guess, but that's not our style at all. And I think that's actually another big advantage for making us more trustworthy. That like my real name is on the product.
Absolutely, yeah. There's a lot of ghost writers and ghost content writers, and it's just like a known thing in the crypto space to kind of like be anonymous. It's like I don't know why people
Yeah.
like doing that. So do we want to look into the vaults a little bit more?
Yeah. Let's take a peek.
Cool.
So we have 6 different ones running right now. And we can look at Bitcoin flagship 2. I'm sure that this went up a whole lot today. Okay, so this is one of the vault's pages. It's easier to just deposit or withdraw after somebody connects their wallet. And then one of the things that we've chosen to do is actually to have videos on every one of these vaults. And you can see another little version of James right there. And I think that that's a really cool method of communicating what this thing does, right? Back in the day, maybe there'd be this investment prospectus where like I give you a pamphlet and then you open up that brochure and then you look at the three little panels of the pamphlet. And we may end up creating that for a more middle-aged or older audience. I actually talked to a guy yesterday. He said, like, you guys need to have sales collateral. Like, I need a brochure. I'm like, we can make a brochure. Shoot, dog. Like, I don't care. It's 1980 again. Fine.
Oh my god. I know, like, cause there's gonna be some people that are not they're not YouTube familiar, like in the older generation. So, but I agree. I think the videos down below are well. I think that gives you a competitive edge against a lot of these other different kinds of companies, even just generally in the crypto space, because it's a new concept. So you really need to understand what people are getting involved in. I think taking the extra time to make a 1 minute, 2 minute video that clearly explains, and it's you, it's like the founder of the company doing it. I think that gives you a huge competitive edge.
Yeah. And I think another competitive edge is transparency. And so we list which protocols are being used on the back end. We list the tokens that are involved in the strategy. This is hedge JLP. It's a very complex strategy on the back end, but it basically just uses lending like any other stablecoin platform does to make money, but it ends up earning, we put target APY at 15%. It's very conservative. It's earning around 25% per year right now, which is pretty amazing for something that has very little drawdown. And so this is an incredibly popular product on Solana, but a lot of people outside of Solana have never heard of it. And so we think that this is actually going to be one of our big winners when we're talking to people. It's like, hey, what should I invest in at Quant.Fun? It's like, well, this one has a pretty amazing Sharpe ratio because it just doesn't have the drawdowns like other things do in the same way. Like the more assertive up and down of the Bitcoin flagship strategy that I showed you. So like people can shop around. We have these tags, I think, which are also helpful, like medium risk. If a vault is newer, we put it on waitlist only. So only our whales within our whales chat, because we're crypto, are able to access it. And then once it has more of a track record, like a whole month of track record, then we can open it up to everybody. And so that's a little bit of how the vaults work. I'm really excited for the opportunity to get even more hedge funds listed on the platform. So we'll have more options, but we have very different levels of risk reward, all the way from this like simpler high yield savings, making around 7%, all the way to the Bitcoin flagship 2, which in back testing, it can actually go to details again. I can go to, you put it up here, view backtest results, and you can actually see like how it performs versus Bitcoin, and you check out for different time periods. And you can say, okay, this outperformed Bitcoin the last year, ratio 2.57, which is excellent, versus a Sharpe ratio of 1.83, that kind of thing. And so I think that type of more technical answer is actually also really attractive for people that are considering these products and when they're shopping around.
When, like, for example, if I
Mhm.
wanted to get involved in one of these, I know the white list, you just explained that, like for whales and stuff, but
Yeah.
is there a minimum or a maximum that I need to invest into this, or
The minimum is $10, so very retail friendly.
I can afford that?
Yeah, I'm.
Great, great, cool. And you
Yeah.
guys, obviously, you guys don't have a maximum of what you could invest, or do
Well,
you?
there on the back end, there is a maximum. I can increase it. Uh, that answer becomes more technical. So, like, Vanessa, if you said, "All right, James, actually, I really like this. I want to earn money here. I'm feeling wild. I want to put $100,000 tomorrow." I'd say, let me like
Holy
check.
shit!
I gotta like run a command to make sure that the vault cap is up to handle that, but then we're good. And
Awesome,
so
awesome.
on the back end, there's actually a cap for the vaults. And I think that's actually really important because some strategies, they eventually will have like some natural cap. And it might be really high. Like the Bitcoin flagship 2 might start performing worse or just slightly worse because there's too much money in it at like $20 million in TVL or something really huge, really large for a single vault. And that's possible, but we're not anywhere close to running into that kind of problem with any of these vaults. And so like if we needed to be able to handle an infusion of $25 million tomorrow, we can handle that because of the scalability of the blockchain tech. And I think that's really awesome.
Right, right, right. Cool. Yeah, no, I just wanted to ask that question for anybody that will be listening and is listening that would be interested in getting involved in this.
Yeah.
So you let me backtrack for a second just to clarify. So you said that you can connect your Solana wallet, correct?
Yeah, right
But
now it's Solana, but in the future we're going to set it up so that you can actually connect wallets from the Ethereum networks as well, like Base, and so that'll create a much smoother experience for you. You won't have to have a Solana wallet if you don't already have one.
right, I know that you had mentioned that, and that's like
Yeah,
part of the easy retail experience. Yeah.
yeah.
So
So you eventually won't have to care like what these vaults are running on in the back end. And I think that's really valuable. Yeah.
I think that's awesome. I love the whole vault concept. Now that I truly deeply understand how this works, more security for the user that wants to get involved in this
Yeah.
experience. It's less risk and less fear of trust with whoever you are entrusting in to invest this money and see these
Mhm.
returns.
And, like, for some of our vaults, you can get your money out with no delay.
Oh my
So,
god,
I think
that's
that's
also
also
really
really
important.
attractive. Yeah.
Yeah.
We try to keep the delay minimal. So for, like, the Bitcoin ones, it's 2 hours just so that the strategy can handle its stuff on the back end. But for
Mhm.
some of these, like this one, it's actually so simple that there's no delay. You can just take out your money whenever you want.
So, what is your favorite feature or your favorite vault of this whole platform? Or I guess also, like, what would be your recommendation? I know no financial advice on the podcast,
Yeah,
but
NFA.
as a friend out here,
Sure.
what would you recommend people to get involved with?
I think that for a lot of people, we're going to make this public soon for the Hedge GLP, but this is an incredibly popular product that has very little drawdowns. I mean, you're looking at the very beginning, it did have a drawdown of like 1.3%, but this is pretty amazing for how much money these make over time. And the like classical performance of this is like around 25% per year. So I think those are really attractive. But one thing that's actually really interesting is our Bitcoin fundamental strategy. And so what this does is it normally it's or is earning some sort of stablecoin yield between 5 to 10%, but it'll place trades and it has an almost 100% success rate in the trades it places because it's based on that research that I mentioned. Not 100%, doesn't always win, but because it's so conservative, it'll place around 5 trades a year and those trades win really often. So I think this is an exciting product because I expect it to return around 40% per year or 50% per year with very little drawdown. And so it's really interesting as that. So like it's like stablecoin yield, plus this interesting extra element of winning trades.
Hmm.
And this is it's and something you don't have to think about too much. Like when Bitcoin is massively oversold, it will buy, and then when the price recovers back to more of like a fundamental value where it should be, it'll sell again. And I think that that's something that's really valuable. That it's kind of passively doing that for you. But it's always, even while it actually has an open position, by the way, still earning that 5 to 10% yield.
Brilliant. I
Yeah,
love it.
I hope so. It's pretty exciting stuff.
It
Uh,
is. It is.
yeah,
Yeah. No. And I think the way that you've explained everything throughout this is perfect.
yeah.
Do you guys have a page where, I don't know, you explain this a little bit deeper to new people, like new onboarders of this? Because I coming up. Oh, perfect. Yeah. Yes. This is like. Wait, well, is this on your platform? Like here, this.
This is our documentation. So at the bottom of the page, you can click on documentation here. Also, if you talk to our agent, she'll have a link to our docs typically in her responses as well.
Perfect.
And so
Perfect.
we'll see what she says back when I said hi.
Perfect.
Hello. There you go. And we're at this, and then get started, new crypto users.
Awesome, awesome. I'm so glad. Like here I am just making sure I ask the right questions for everybody that's interested in this platform. So definitely if anybody needs additional information, additional guidance, this is the best place to access that information on the platform.
Yeah. And then I'll briefly talk about our product roadmap because I'm really excited about this stuff. So in Q3, we did create a lot of vaults, core UX improvements, made partnership deals with people on Twitter because you have to do that to get more customers, product education, blockchain education, the videos that you see, and then academic and professional promotion. I've spoken at 4 conferences in the Boston area within the last calendar month, not rolling month. So that's been really awesome. But the agentic development stuff is super fascinating. So where she's able to help you, Vanessa, to figure out what you want to invest in, but also to be able to accept capital from other agents is really exciting. And so that's how we more closer toward this idea of a society of AI agents where Quant will actually be able to not just share a conversation directly with you, but if you talk to a different agent like Virtual's Butler agent or some other more entry way, that it may be able to like, refer and have a conversation with Quant about that. And then the capital can actually be deployed from one agent to another into the vaults. And I think that that's really exciting, but that's definitely more in the future.
Yeah, absolutely. That's awesome. Oh, this is like so cool. I'm like so invested into it now. Honestly, James, I need to talk to you after the podcast because I have a few questions like personally for myself because I would love to get involved in this. And also just like the way that you talk about you like It is completely obvious you are insanely passionate about what you do. You know, like you've spoken at so many events. I mean, saw you speak at one event. You did an amazing job. I understand that you are somebody that can be trusted in the space with this kind of
Thank you.
stuff. So yeah, like you've done like this is really cool. I'm very impressed.
I,
Coming from me, yeah, it's a lot, right? But
blushing.
yeah, if there's anything else you want to share about the website, let's definitely do it. If not, I know we've already been running for an hour, so I don't want to take up too much more of your time. But like I said to you before we started recording, we usually talk for well over 30 minutes.
Yeah, yeah. So we'll get a little bit more philosophical. One of the big reasons why people are interested in blockchain or crypto is because they want to make money trading, right? Or investing. That's why they come into this, and they stay for other reasons maybe, but that's probably why a lot of the people are listening to the podcast right now. They're not cryptography nerds, right? That's not why they're into
Yeah,
this,
yeah.
right? And so I think that it's actually really important to consistently reevaluate your portfolio to say, like, is this spiritually aligned with what I really want in life? Or am I taking on too much risk or too little risk? And so really thinking about that is super important. Products like vaults can help because you're always dancing with the same girl. It's the same product regardless of whether the market changes. Your relationship is with that algorithm. So someone intelligent has made a managed fund for you. But if you're going to manage it yourself, I would encourage you to actually write down your plan when you start. Like, hey, I'm going to open up a Bitcoin long here. And I'm going to sell it at the end of October, or if it reaches this price point, and here's my stop loss. So actually using that kind of system where you're keeping a trading journal or even an investing journal can be really helpful. But also, if an asset that you're buying, maybe something lower cap, like you buy an AI Asia token, 3X's, now's the time. It's like, okay, this is a very different products now. When you're holding something, it's like you're buying it still,
Right.
right?
Yes, yes,
Yeah, you're
yes.
always buying it every time, every second you hold it. That's the kind
That's
of how I
true.
think about it. And so
Yeah.
I want you to be really attentive to making sure your portfolio aligns with your personal goals. And you can actually do this by writing things down. You could talk to an LLM about like, hey, how can I match this to my specific risk tolerance? But I have the strong suspicion that many people in crypto, and from conversations, I feel like this is very true. They are not actually managing their portfolio in a way that's healthy for them, and that's why crypto is famous for actually causing anxiety with trading. It's because people make a lot of money, but then like, oh my gosh, it goes up and down so much. And so actually being very intentional about managing your own risk as you try to make money is super important. And I think that's really valuable.
That is incredibly valuable. I wanna thank you, James, so much for coming on to the podcast. Your insight was amazing. I'll make sure to list all your resources down below. I appreciate you teaching me today about everything that you have going on in your world in the crypto space and AI and blockchain. And if you have any resources beyond the business venture and stuff that you feel like is important for people to know, maybe just some education, definitely we'll list that below too.
Of course, yeah. If you just want to learn about crypto generally, don't read a book, please. I did recommend one. It's a good book written recently, somewhat, but I highly recommend A16Z Crypto on YouTube and the Ethereum Foundation on YouTube. They've got great stuff. It's engaging. It's fun. The people that are giving the talks are fun. So highly recommend.
Perfect. Thank you. Thank you so much. We will tune in everybody next Monday. Thank you for watching Cryptic Humility and have a great night.